Hi, I'm BrettSwarts, founder of Capital Gains Tax Solutions, where we use the Deferred Sales Trust to help you escape feeling trapped by capital gains taxes or help your clients do the same. In this video, we're going to cover when is the tax paid. The tax is paid on the Deferred Sales Trust when you receive the funds, either in the form of interest payments and or principal. So what happens when you receive the funds? Well, when you receive the funds, you're going to pay ordinary income tax on interest payments and a combination either of capital gains taxes and ordinary income when you receive the depreciation recapture and or the capital gains tax out of the principal. So it just kind of depends on the circumstance and how you sold the deal and what portion of that is received. So we work hand in hand with your own CPA. Actually, our clients receive a 1099 at the end of the year based upon how much income they've received, sort of like you would receive a 1099 from, let's say, a bank. If you had money in a bank and you earn interest on it, they send you a 1099 at the end of the year, of which you take that and you report it to your CPA. So it's all properly documented for your tax return. Also, the form and the structure of the payments are very flexible. So most of our clients like to take the interest-only payments and they structure the note over a 10-year term. And at the end of the 10 years, they can renew for another 10 years and continue to take interest-only payments. So let's walk through a scenario. Let's imagine you're selling a $3 million business and you're going to pay about $1 million in tax. And so instead of having two, we'd like to have three minus some of the fees with the Deferred Sales Trust. And all three is earning interest. Perhaps it's earning about 8%, and after fees, it's netting about 6.5%. So on that 6.5%, you're paying ordinary income tax on that. Now, at the end of the 10 years, the balloon payment is due, and all $3 million would be paid. At that point, it would trigger the capital gains tax. And by the way, it'd be in that given year based upon those rates in that given year. However, you might decide, you know what, I'd like to just renew the trust for another 10 years. The next question would be, well, how long can you continue to renew? Well, as the laws stand right now, every 10 years, you can essentially renew for another 10 years. By the way, you might want a shorter note too. You can do a 5-year note, a 3-year note. You can do a 1-year note. The note doesn't have to be 10 years, but 10 years is typically the max that we do for the structure. That being said, again, you can continue to renew and then it can pass inside of your living trust. So it becomes an asset inside of your living trust, of which your heirs can inherit the living trust, of which they can basically step into your shoes and do the same thing, meaning they can live off the interest, pay ordinary income tax on that, and or when the balloon payment comes due, cash out and then walk away and pay capital gains tax there, or continue to renew every 10 years as well. So that is an overview of when and how the tax is actually paid. And if you have any questions, we'd love the opportunity to walk you through more of this. If you want to see how your deal looks, you can go to our website right now, capitalgainstaxsolutions.com, and you can click on the Deferred Sales Trust calculator or request a quote in the top right corner, and or you can also book a time to discuss a one-on-one consultation, no cost call. We look forward to connecting with you soon. Thanks so much for watching this video.